Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Thursday market webcast. Okay, for those of you that did not catch the closing wrap-up last night, go ahead and check that out. It's over on YouTube. It's over on our Circle site. Brings together a little bit about how things are trading. As we look ahead into today, they've gone back down. They traded pretty darn close to the lower band. Not quite though. And they're pretty much going to have to engage. I think if they print 94, 94 to 92, that'll encapsulate the lower band, keep the lower band right going. The bands are expanding, but they're not expanding at all that high of a rate. We're up to 6.96, which is not, it's not compressed obviously, but it's not blown out either. So maintaining the band ride is pretty doable. The hourly chart is very typical of the pattern that we've seen. You're seeing highs in the first half hour of the day. You're seeing lows. 2 days ago, around last hour, 3:30 in the afternoon, then they bounced it. They went down to 77 at about 1:30 yesterday. They bounced it from there, and it's been flat-ish through Globex. So we're back into another consolidation. As long as the bears keep winning these battles, they take out 77 today, keep the band ride going, then it's going to be more of the same. It's going to be more of the same. What do the bulls have to do? They need to take out yesterday's highs. So that's what? We'll just call it, what's that? 43.36. So we'll call the thing 43.40. They got to trade up to 43.40. They've got to hold it up there. They need to close up there. But as far as anything sustainable from the bulls, you can't take anything seriously. I spent years and years on here, literally, the better part of a decade on this webcast saying, look, you can't take the bears seriously. They're just noise until they're able to do X. Well, for one of the few times, in a decade, I'm telling you this. You cannot take the bulls seriously. They are noise anywhere below the 9-day and the 100-day. If you look up at the 100-day, up there at 44.60, tucked right above it is the daily mid-band. So we talked last week about how the 100-day was going to be important. You seal that off, it's going to go, right? It did. The daily mid-band is the ultimate delineator as to whether we are buy dips or sell rallies. And if you can't figure out from that chart that we are sell rallies, come on. So be long the rally, stay out of the rally. Don't fight the rally. Wait for it to stall out, get some lower highs, get back in and go. We're actually long 04. We've been long 04 3 or 4 times since yesterday when they bounced it, and I talked about this in the wrap-up. When they bounced it and went through, it kind of broke the little, contrarian cycle of, the dip buyers had gotten murdered all day. If you were throwing darts at lows yesterday, you got killed until it finally lifted up. But when it took out 4,300 like it wasn't there, then it was ready. It keeps coming back. It keeps trading up to like 22 to 26. Comes back into 02 to 04, back and forth. So, it hasn't done anything to our risk marker, 4,300 to 4,302. So it's just a re-entry for us when it comes back in. Most recent one was like, I don't know, what was that, 5:30 in the morning, whenever I woke up today. It's behaved okay. The bears need to convert that 4,300 to 4,304. They need to be printing stuff with 42s on it. They need to take out the 77. The bulls need to stop coming back down here. They need to stop coming back down here. They need to win one of these consolidations, and they need to close it above 43.40. That's the key for them today. As far as the actual short-term price action, I think it's going to be pretty choppy today. The type of day that we're looking at with the stuff that we run in the room, yesterday. Yesterday was a day that had a chance to kind of, not trend. I hate that. That's not the word. To, call it a clear winner, clear loser. the Bears fumbled that ball at 1:30, and we ended up with a very neutral day. You had to move down, you had to move back. It was just a round trip. Great for trading, not good for making big decisions about the day. Today is usually a very truncated situation. So we could see that consolidation extend into tomorrow, where the setup is for something much more directional. The last thing I will mention is we talked about the weekly pivot early in the week. You see it way up off in the distance there at 44.11.5. They haven't even tried to take it out. So the Bears get the advantage of Thursday and Friday directional pricing if they can pull it off. It's there. Take out 77, and that can absolutely occur. So those are the key areas. 43.40 on the up, 77 on the down. Break free of this roundy to 43.05 thing. So where's stuff at? Volume weighted average price 43.15. Proprietary moving average 43.12 right there, along with the daily pivot. Hourly mid 43.14. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. We'll have a closing wrap up tonight. Subscribers, you'll have that, and then you'll have the subscriber webcast later on in the evening. That's the one that we do live. People can ask questions. We had a decent little crowd last night. We'll do it again tonight. All right, take care. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.